Hey everybody, welcome to today's video. My name is David. Thanks for tuning into my channel. Today we're going to be talking about 2022, setting goals, some key dates and key values that have changed since 2021 that'll be important for you when you're doing your planning for 2022. So let's jump into it. And by the way, just want to say thanks to everyone who supported my channel, you're following and making the comments. I really appreciate your support. Last year was a huge success, blew my mind. Never thought it was going to be that great in terms of the information that I was sharing with everyone. I really was just blown away by everyone enjoying my videos. So again, thanks so much for supporting last year, and let's have a great year this year. Let's begin with just talking briefly about, the beginning of the year is a great time for you to do planning. If you haven't done your business plan already, it's okay. You can get into it now, but ideally you want to start it November, December, have everything, worked out so that you've been able to know exactly what you're going to be doing jumping into the new year. So it's important that this year, when you go to do your planning for next year, try to get it done November, December, and then work it backwards. Make sure the math all works right and that you're fully on board committing to those goals. Today we're going to be talking about a few things. Here's a list of the things we're going to talk about. The RRSP contribution limit, the tax-free savings contribution limit, and a couple examples of how you can use both RRSP and TFSA to grow your assets. What's changed with any pension contribution limits, like Canada Pension Plan, and I hope that those kind of things are going to be useful for you in planning, because we're going to be talking about how it reflects both as an individual and a business owner. So let's dive right into that right away. An RSP contribution room for 2022 is $29,210. That has to be all received into your financial institution by March 1st, 2022, in order for it to be used towards your 2021 tax year. So $29,210. Now, something about RSPs that you might find interesting. The average deposit, the average deposit in Canada is $5,000, just over $5,000. Now that average comes from a number of different reasons. Some people just put 5,000. Some people's incomes are lower and that's the maximum they can put in. Some people's budgets aren't great that year and they're putting more money towards other assets like buying real estate and that kind of thing. So, and also, last year was a really unusual year with Omicron and COVID, and some people's incomes just weren't there. And so, but the average is $5,000 per year. Now let's talk about how to increase your contribution without using almost zero of your own money. Now some of you may know this already, but very few actually take advantage of it, and I'm going to give you the formula for it right now. So let's look at this slide. The example here is, and do this with me. If you've got some paper or a calculator with you, do it with me and just substitute your number. It doesn't have to be $5,000. It can be whatever number you want. So let's assume your marginal tax rate is 40%. So you're going to take 1 divided by 40, which is going to be 1 divided by 0.40. That's going to equal 2.5. Then subtract 1 from that number, and that equals 1.5. So if you're to take it a different way, if your marginal tax rate was 30%, then just do 1 divided by 0.3. Okay, so whatever your marginal tax rate is, take 1 divided by your marginal tax rate. Okay, now you've got that 1.5. Assuming your RSP contribution was 5,000, let's just go with that number for the math. Divide it by 1.5. That becomes $3,333. That's the amount you should borrow to do an RSP loan, basically. So instead of just having a $5,000 deposit, then you're actually going to be having a bigger amount, right? $8,300. So here in this case, why the $3,333? That's what you're going to get back in your taxes when you file your income tax. So when you get that refund back, you just pay off the loan. So the only thing you're really having to carry is the interest for that period of time, and there's institutions that will give you no interest for a certain period of time. It doesn't really matter. It's a very short window to carry the interest costs, and so it's not such a big deal. So instead now of having your $5,000 RSP, you now have $8,333, and it really didn't cost you anything to pick up the extra $3,333. This is simple, it's easy to do, it doesn't cost you really any effort at all, short period to carry a loan, you're not carrying it into year 2, 3, 4, and 5, it's just for like what, maybe 60 days, maybe 90 days maximum. Remember to talk to your accountant to make sure your math is accurate, but this is a proven strategy. A lot of people just make their RSP contribution and then don't think that they are going to be able to do anything more, and they get their return and they go, okay, I've got some free money, now what do I do? And they'll spend money on whatever, take a vacation. But this is better if you take your return and dump it right back into your RSP. This is so awesome. Okay, next one. Let's talk about tax-free savings accounts. Nothing has changed for your tax-free savings account. The good news is it's $6,000 that you can put in this year. The lifetime limit, this is $81,500. The tax-free savings account started in 2009, so you have the contribution room from 2009 all the way to 2022 to use up if you hadn't had a tax-free savings account back then. That doesn't mean if you were born after 2009 that you could go back to before you were born. It doesn't work that way, okay? So just keep that in mind. But check out this video here on how to hack your tax-free savings account to have more money in your tax-free savings account. I love that video. I think it's such an awesome thing to do in your tax-free savings account, but check it out. You're going to love it. Okay, talking about CPP. This is kind of very interesting because nobody pays attention to their CPP contributions. You just go to work and you see it as an expense, a deduction from your income every month, every week, every 2 weeks, and you don't think of it as being an investment in your future, but it actually is. It makes up now, with the new enhancement, it makes up about 33% of your savings for retirement. So think about that. It used to be, it made up 25%. Now they're bumping it all the way up to 33%. So this is a significant amount of your retirement income. For a lot of people, it's a significant portion. Sadly, for a lot of seniors, this is the only income. But I want you to consider that through your retirement years, this could add up to about $400,000 of income during your retirement. So don't pass it off as something that's not important. So let's look at this. Let's examine how you can maximize your CPP to make sure you get the maximum when you go to retire. So let's just back up a little bit. The Canada Pension Plan is really based off of, how do they calculate that? Well, it's your length of time contributing to the plan, the age that you elect to receive the benefit, so is it 60, between 60 and age 70, and your contributions to the plan. This is the key here. I want to focus that with you today. Your contributions to the plan, this is really based on your employment income. And so it's really based off of that YMP. You may have heard that before when employers are talking about pension plans, but this is called the year's maximum pensionable earnings. What does that mean for you? This is really important. Okay, in 2022, the CPP earnings ceiling is $64,900. That's a big word. That's basically the YMP. So what does that mean? That means the maximum amount of CPP contribution that the government can take from you each year is $3,500. So any money that you, like income that you earn above $64,900, there's no deductions towards CPP. So you can rest assured that anything above $64,000, you're not going to get a deduction for CPP. However, if you are earning less, this is the key. And this is why I want you to pay attention. For anybody that's earning less than $64,000, if you're just starting working, you have an entry-level position, or if you are a business owner and you're paying yourself a salary, these are key things to make sure you're going to get the maximum. And pay attention to the videos. I think I have 4 videos now on CPP. This is really important because so many people, actually 59%, most people have, the average is 59% of the total CPP. So most people are not getting their maximum. It's just over $1,200 per month right now. and most people are in the $600 range. And that's largely because CPP takes into account the low earning years. Now, there's about 8 years where they subtract that out. So they'll subtract your 0 to your lowest 8 years and then do the calculation. And so in that calculation, if you have some lower earning years, years in which you earned less than $64,000, then that's going to draw down the amount that you could get in retirement. So it's really important that you make at least $65,000. Okay, so this is going to be important. If you can do that, then you can be assured that you're going to earn $3,500, or not earn, but you'll have $3,500 contributed to your CPP. So everybody hunting for a job and you're negotiating for your jobs, make sure you try to get them to $65,000 or more. Otherwise, it's going to hurt your retirement. You don't want to do that. You want to make sure that your CPP is fully funded. I hope that's clear for you. Now, for all of you business owners, you know, a lot of accountants will tell you, pay yourself a dividend. And there's videos up here. I think I've got 2 videos around business owners, how you should pay yourself, salary versus dividends, and what happens if you pay yourself dividend. What benefits do you exclude because you have dividend income versus if you had salary income, what does it do for you? So make sure, if you're a business owner, to pay yourself at least a salary of $65,000 so that you can contribute your maximum to your CPP. I know it's a burden. I know you're paying a little bit more in tax, but believe me, you want to have that CPP in your calculation. You know, COVID was a great example of how things can just, your business can be ripped out from underneath you. Not your fault, but there's an example now of 2 years, because if you look at today's date, there's 2 years roughly of some really bad news for business owners. And this is going to hurt a lot of business owners for retirement and just keeping your business open. So let's make sure that you pay yourself a salary of at least $65,000. Then anything you want above that, pay yourself a dividend. Talk to your accountant about it. It's sound advice. You want to make sure you're contributing to your CPP. So that's really important as a business owner, that you do pay yourself. I just wanted to stress that really as much as I can, because I see a lot of business owners who are not contributing to CPP, and they get to the end of the rainbow and that pension is just not what they thought it was going to be. So it's really important. Now, the other obvious reason to pay yourself a salary is it creates RSP room. Now, hold on. I know some of you are thinking, wait a minute, I don't believe in RSPs. Or David, you talked about RSPs is not the best planning solution for a business owner. And I have said that. I've said in the past that everybody is different, that some people opt to use RSPs. And for business owners, there's other ways for you to save for retirement that's more beneficial to your company rather than to you. But one of the things I do say is a minimum. I mean, obviously you have expenses. You've got a mortgage you may have to pay on a house, and you've got university bills and so on for kids. And there's other expenses other than that. But the idea is you're going to have to pay yourself a salary. So pay yourself at least $65,000. But it does create that RSP contribution room, which is important because when it comes time that if you are going to be selling a piece of your business off, or you might have come into some extra money, you'll be looking for places to put your money to have tax sheltering. So making sure that you've built up RSP contribution room is not a bad thing. And then the other thing that I've mentioned in the videos before as well is that when you pay yourself a salary, this makes you eligible to use the most powerful retirement planning tool available to incorporated business owners, and that's called an individual pension plan. I'll link it up here. I have a good video on individual pension plan. It's also a blog. It's actually a page on my website. So it goes right into detail on, I think there's 3 or 4 different case examples: low income, medium income, and a high income earner business owner. So paying yourself a salary is a good thing because you're able to use like a pension plan that's on steroids. It's amazing, amazing product. Okay, so I go into every video. I just want to remind you, where do you begin? Get a financial plan done. 2 out of 10 people actually have a written financial plan. A written financial plan is the key to your success. It's a living, breathing document. We review it every single year. We update it, make sure that any changes that you've done, we're going to add those and make sure you're still on track. I really appreciate you taking the time to view this video today. It's important for me to just share some of the values that are going to be important in your planning this year, whether you're an individual or a business owner, and to keep in mind some of those important key dates. I always like to tell everyone in my videos, we take care of your wealth management so you can take care of what's most important. I firmly believe in that. I think it's important that you spend the time with people that you love and care for, and in doing the things that you love and make you excited about your life. Here's our contact information below. Feel welcome to reach out to us via any one of these mediums. Have a look at some of the other videos. I'm sure you're going to love them. Please leave your comments below. Share and like this with anyone that you feel would really enjoy this content. If you have any suggestions at all as to other videos that you'd like us to make, please put your comments below. Thanks again for tuning in. I look forward to seeing you in the next video. Take care.